Houston's oldest refinery shut down in March 2025 after 106 years of operation, eliminating 140,000 barrels of gasoline and 100,000 barrels of diesel production every single day. The LyondellBasell Refinery, built in 1918 by oil magnate Harry Sinclair, closed permanently because management refused to spend $2 billion on upgrades. This was not just another facility closure. This was Houston losing 8.57% of its entire refining capacity in a single day, while the Gulf Coast hemorrhaged fuel production at unprecedented rates. The numbers were staggering even before this closure. Since 2020, the Gulf Coast had already lost 1.2 million barrels per day of refining capacity. That is 63 million gallons of fuel that stopped being produced every single day. Phillips 66 shut their Alliance Refinery in Louisiana after Hurricane Ida destroyed it. Shell's Convent Refinery closed permanently. Calcasieu refining in Lake Charles stopped operations. The Gulf Coast produced nearly half of America's gasoline and diesel, and the infrastructure collapsed faster than anyone predicted. LyondellBasell announced the closure back in 2022 when management looked at the $2 billion in upgrade costs and decided it was not worth it for a facility, processing 263,776 barrels of crude per day. Employment fell from 1,200 workers down to 450 before the final shutdown. Most employees left after the announcement, taking decades of operational knowledge with them. The skeleton crew that remained maintained only basic operations until March 2025, when everything shut down for good. This facility did not just make regular gasoline either. It produced specialized gasoline grades that other refineries could not replicate. It also made industrial diesel for Houston's massive shipping operations, aviation fuel for the airports, and specialty petrochemical products that kept other plants running. When March hit, these products had no alternative sources, and buyers scrambled to find replacements that did not exist. Hurricane Ida showed how vulnerable these refineries really were. The storm hit Louisiana on August 29, 2021. As a Category 4 hurricane. Phillips 66's Alliance Refinery stood directly in its path. Built to process 255,500 barrels per day, it ranked among Louisiana's most important facilities. The company had invested millions in flood walls and reinforcements over the years. It did not matter at all. Storm surge pushed 8 feet of water inside the main processing units. Salt water corroded electrical systems throughout the entire facility. The catalytic cracking unit that was essential for gasoline production stayed underwater for 3 days. Transformers exploded from water damage. Control rooms filled with contaminated sludge that destroyed everything. Phillips 66 confirmed in November 2021 that Alliance would never restart. 900 workers received termination notices. The city of Bellechasse lost its largest employer and primary tax base overnight. Louisiana's refining capacity dropped 12% permanently. That facility's 147,000 barrels of daily gasoline production had supplied roughly 2.4 million cars. Those supplies disappeared from the market forever. Shell made an even bigger miscalculation with their Convent Refinery. The facility could process 240,000 barrels per day, specializing in low-sulfur diesel required for modern trucks and ships. When lockdowns crashed fuel demand by 40% in 2020, Shell tried to sell the facility. They marketed it from July to October, and nobody wanted to buy it. Shell announced permanent closure in November 2020. 700 workers lost their jobs immediately. Millions of dollars in specialized equipment were dismantled and sold for scrap value. Then, demand returned faster than anyone predicted, and diesel prices hit record highs. Shell scrambled to salvage something, announcing a $1.4 billion conversion to biofuel production. The converted facility will not produce fuel until 2029. When it does, it will only make 50,000 barrels per day of renewable diesel. Original petroleum capacity was 240,000 barrels per day. The permanent loss equaled 190,000 barrels per day. That is 8 million gallons of traditional fuel that Louisiana never produced again. The maintenance crisis made everything worse throughout 2025. October should have been routine maintenance season for Gulf Coast refineries. Plants typically scheduled autumn turnarounds when fuel demand decreased. But the maintenance windows overlapped in unprecedented ways that nobody planned for. TotalEnergies took its Port Arthur, Texas refinery offline for planned work, removing 151,000 barrels per day from production. ExxonMobil scheduled maintenance at Baton Rouge, cutting another 120,000 barrels per day. Multiple smaller facilities coordinated their turnarounds at the same time, creating an unprecedented overlap. Combined outages reached 370,000 barrels per day offline, double the historical average for autumn maintenance. Equipment installed in the 1970s and the 1980s that should have been replaced years ago started failing within weeks of each other. The whole system was held together with temporary patches and prayers. Marathon's Garyville facility showed exactly how bad things were. It was processing 578,000 barrels per day on equipment from the 1970s. The catalytic cracker needed complete rebuilding. Metal fatigue appeared throughout the crude unit. The coker operated at 60% of design efficiency, but shutting down for comprehensive repairs would have created immediate fuel shortages across the Southeast, so they kept running with Band-Aid fixes. The economics didn't work anymore either. West Texas crude traded at $58 per barrel. Gasoline wholesaled at $1.86 per gallon. After processing costs, environmental compliance, and transportation, profit margins had shrunk to $4 per barrel. These same margins reached $35 per barrel in 2022. Refineries needed $15 per barrel minimum to break even on operations. Many Gulf Coast facilities operated below that threshold, literally losing money on every barrel they processed. Gasoline crack spreads fell from $28 to $11 per barrel. Diesel dropped from $45 to $19 per barrel. The business model was broken. Operating costs kept climbing no matter what. Environmental compliance demanded expensive retrofits. Insurance premiums doubled after recent hurricane damage. Property taxes in Harris County, Texas increased 40% in 2 years. Labor costs exploded as skilled workers became scarce. Natural gas for processing heat cost triple what it did 5 years earlier. Faced with these collapsing fuel margins, refineries pivoted to petrochemical production instead. Plastics demand increased 4% annually, while gasoline consumption stayed flat. Chemical feedstocks generated twice the profit margin of transportation fuels. Why make gasoline at a loss when you could make plastics at a profit? ExxonMobil's Beaumont expansion added 250,000 barrels per day of capacity, entirely dedicated to chemical production rather than fuel. Chevron's Pasadena refinery reduced gasoline output by 30,000 barrels per day, while increasing petrochemical feedstock production by 45,000 barrels per day. Every barrel shifted to chemical production meant one less barrel making gasoline or diesel. Gulf Coast fuel production declined 8% in 2024, despite refineries running at high utilization rates. Facilities operated at capacity while producing less fuel than ever because they were making chemicals instead. The infrastructure existed, but it wasn't making what America needed to keep vehicles moving. LyondellBasell had been exporting 65,000 barrels of products every day, and those exports vanished when the plant closed. Mexico relied on Texas refineries for 70% of its gasoline supply. Central American countries imported 85% of their diesel from Gulf Coast facilities. These nations had no alternative suppliers ready to fill the gap. When LyondellBasell's exports ceased, Mexico faced immediate supply problems. Pemex had already warned northern Mexican states to prepare for rationing, and it happened exactly as predicted. Guatemala, Honduras, and El Salvador all depended on these exports that vanished overnight. Losing export markets should have theoretically increased domestic supply, but refineries needed export revenue to maintain profitable utilization rates. Without exports, more facilities prepared to close. America's last major refinery was constructed in 1977. Building a modern 200,000 barrels per day facility required a minimum investment of $10 billion. Environmental permitting alone took 5 to 10 years. Construction required another 5 years. Legal challenges added more years. Companies would not invest $10 billion for potential profits starting in 2040. Marathon evaluated constructing a new Texas refinery in 2022 when margins peaked. Financial analysis showed 3% returns over 30 years. The project was canceled immediately. No new refineries were coming to replace what closed. The infrastructure, built over a century, disappeared within a decade. The timeline kept accelerating after LyondellBasell. Phillips 66 in Wilmington shut down in December 2025. Valero Benicia was closing in April 2026. By the end of 2026, Gulf Coast capacity would be 25% lower than 2020 levels. Valero evaluated closing their Houston refinery. Citgo considered shuttering Lake Charles. ExxonMobil discussed consolidating older Texas facilities. Every quarterly earnings call brought new closure announcements. Shareholders demanded profitability, and closing refineries was easier than fixing them. The LyondellBasell closure devastated Houston's east side communities. Similar to Belchas when the Alliance Refinery closed, the area lost substantial direct employment. Municipal tax revenue fell overnight. Schools saw enrollment drops as families relocated. Regional medical facilities reduced services. Dozens of small businesses that served refinery workers closed within months. Refinery workers had earned between $85,000 and $120,000 annually. These specialized skills did not transfer to other industries easily. A crude unit operator with 20 years of experience had few options outside refining. Contract workers suffered even more, since typically 3 to 4 contractors supported each direct employee. Thousands lost steady employment with the closure. Houston's ship channel employed 250,000 refinery workers in 2000. After LyondellBasell closed, employment dropped to 135,000. Foreclosed mortgages, depleted college funds, and destroyed retirement plans hid behind those statistics. Entire middle-class communities built on refinery jobs disappeared. Gasoline prices had not spiked immediately because high prices reduced demand, but the system operated without any resilience after March 2025. One hurricane hitting the wrong facility, an explosion at a major refinery, or a pipeline failure lasting weeks would trigger immediate shortages because there was no spare capacity anywhere. The Gulf Coast supplied fuel for 100 million Americans across 15 states. As capacity shrank, these states competed for limited supply. Georgia bid against Florida for gasoline allocations. Tennessee fought Alabama for diesel. Trucking companies implemented permanent fuel surcharges. Airlines hedged aggressively against jet fuel shortages that everyone knew were coming. When LyondellBasell closed in March 2025, Houston lost more than just refining capacity. It lost a piece of history built when refining was America's future. That future shut down with nothing to replace it. The fuel that refinery produced was gone permanently, and America became more dependent on whoever was still willing to refine petroleum products for a profit. 9 months after the closure, the effects rippled through Texas. Gas prices jumped 30 cents per gallon in Houston. Diesel shortages hit trucking companies. The Port of Houston reported delays as fuel barges could not meet demand. Mexico implemented rotating fuel rationing in border states. The warnings everyone ignored became daily reality, and there was no going back.